I think I may have found the worst investment in all of the stock market right now. A lot of my videos, I'll say, hey, this company seems pretty good, but make sure you do your own due diligence because this isn't financial advice. Well, this is almost like this is financial advice in that you should not buy this company. And the more I dig into this, the crazier this story gets. I thought this was going to be like a real quick, 45-minute, do some research on this company, have a couple laughs. No, I've gone so deep in this, and the deeper I dig, the more ridiculous this company is. So there's currently a deli, a single location deli in New Jersey that is being valued in the stock market with a market cap of just over $100 million. And this is the deli. This is it. This is the $100 million deli. So you might be thinking, okay, maybe they have really good bread, or maybe their bologna is to die for, or maybe they plan on franchising and they have a really profitable model. No, it doesn't seem like it. So let's just pull over to their stock real quick on Google. So here's a stock currently trading at $13. Market cap of $101 million. So let's pop into their financials here real quick, just so we can see their sales, their profits, things like that. So in 2020, they were hit pretty hard with COVID. They were hit pretty hard. This is their sales. And, typically when you look at an income statement like this, it's like, okay, that's their sales, but multiply that by 1,000 and that's the real sales. In this case, no, this is their sales. $13,976 in 2020, $21,772 in 2019, $32,000 in 2018. So sales have gone down in the last few years. Okay, but let's look at the profits. I mean, if the profits even matter, this is so ridiculous. Okay, where is net income here? Net income, negative $631,000 in net income, negative $149,000, negative $108,000. Okay, so they are decreasing in sales. Their net income is also decreasing, and their net income is 20 times less than their revenue. So what is going on here? And this is where this story gets absolutely wild. So I can't believe I'm saying this, but I read their 10K, their annual report, just to see if I could pick up any interesting information here. And boy, did I find some interesting information. So I've highlighted what I think is worth sharing on this video. Okay, the company is the originator of a new delicatessen concept. Oh, what is this? A brand new delicatessen concept? What do? They operate a delicatessen store that features home-style sandwiches and other entrees in a casual and friendly atmosphere. That's their new and original concept. Okay, guys, you did it. You thought of it. Okay. Impacts from coronavirus. So they were forced to close for 6 months in 2020, and their stock price has just gone up and up and up in that time. Also, something you might find a little bit curious. So they have two consulting agreements, two companies that they pay consulting fees to. Mind you that they have $20,000 in revenue in the last year. The first one is this company, HWIN Capital Ventures LLC. The term of the consulting agreement is a 1-year agreement, and they pay them $15,000 a month in that agreement, and they anticipate to extend the agreement for 1 additional year. Also, they have a consulting agreement with VCH Limited, who happens to own 10% of their stock. And this agreement is for $25,000 a month. So just the consulting fees that they pay in 1 month is more than their entire 2020 sales. Makes total sense. Jesus Christ. So going further on this 10K, this is just absolutely crazy. The company presently has no full-time employees apart from its officers and directors. Paul F. Marina, president, and Christine T. Lindermuth, who both currently work for the company without any compensation. So we go a little bit further on here. And first we have some risks to an investment in here. So a risk is that their future success is highly dependent on the ability of management to locate and attract a suitable acquisition. Okay, so that makes sense. They became public. That way they could potentially, acquire another delicatessen somewhere in New Jersey and maybe expand their business that way. But if we read a couple of paragraphs further, we have not conducted any market research to identify any business opportunities, though. So they're saying invest in us because we're going to find some kind of suitable acquisition, but we haven't done any research on it. But moving from here. Oh, also they have a bunch of common shares. Also, they have a bunch of common shares that are outstanding, but they also have $155 million in warrants for potential outstanding shares that could dilute the ownership of your current shares. So if you buy any shares, they have a bunch of warrants that will dilute those shares once they, express those warrants. So ridiculous. And now I wanted to talk about the actual owners of this company. Let me just find the ownership information. Hold on just a second here. Okay, owners. So Mr. Morena has been, this is the CEO, CFO, treasurer, and director of the company. He's all those positions. Oh, and he also happens to be the principal of Paulsboro, New Jersey High School and the head wrestling coach of the high school. He is the president, CEO, CFO, treasurer, and director of this. This man wears many hats. He's extremely, extremely impressive. And also I noticed something when I was on Google Street View here. Okay, this is the deli. Let's go down the street a little bit here. Let's look at this. Paulsboro Wrestling Club is right next door. It's so ridiculous. Oh, and then on top of this, where am I at? I'm losing my mind right now. Let's do a Control F. Wrestling appears in their 10K 12 times. In this public company Deli annual report, wrestling appears 12 times. It's so crazy. Okay, let's go back down to the management. Okay, excuse me. So the vice president, secretary, and director of this company, Christine Lindermuth, she's the math teacher at Paulsboro High School. And then the final person, the director here, Peter L. Coker, he doesn't really have a whole lot going on about him. However, his dad, because this is Peter L. Coker Jr., his dad, Peter Coker Sr., he's got some interesting things. So digging into him a little bit further, he is a bit of a rascal, to say the least. So here's one article on him. Man accused of dodging his debts. So he was charged, not convicted, of trying to hide his assets in order to dodge a $900,000 debt. Oh, and also this rascal was charged in 1992 with prostitution and other crimes after allegedly exposing himself to 3 girls while driving through Central School. And, I mean, among many other things, was sued by American Express for nearly $900,000 in unpaid debt. So this is one of the primary holders of stock in this company. Also, their Yelp reviews are just absolutely terrible. So it turns out that the FBI believes, surprisingly, that this is a shell corporation used to launder stolen client money. Who would have guessed it? One other interesting thing here, it's been reported, that the FBI has been investigating for months. It's identified a tie between the CEO / CFO / treasurer / director / high school wrestling coach / principal, high school principal, a connection between him and Robinhood Financial. Vlad Tenev, the CEO of Robinhood, apparently previously worked with Global Equity Limited, who is the single largest shareholder of Hometown International. So there you have it. Probably the worst stock in all the stock market. It's so bad I almost want to buy a share, $13, just to be a part of history. So I hope that you enjoyed this video, because I know I did. I had a hard time even getting through it. So thanks for watching. Like this video, share it to all your investor friends, and have a profitable day.